Chapter 5, Part 5. Now we're going to look at revenue recognition, which on a long-term contract with an overall loss, looking at percentage of completion and completed contract. Again, one other thing I want to talk about, they don't really tell you in the book, but it shows this as part of the homework problems, is construction in process, or CIP, is an asset account, a current asset account, and billings on construction in process is a current liability account. When presented on the balance sheet, these two accounts are always netted together. If billings exceeds construction in process, then it is shown as a current liability called billings in excess of cost. If construction in process exceeds billings, then it is shown as the current assets, costs in excess of billings, just so you know how that is presented on the financial statements, the balance sheet. Now we'll go on and look at these problems. Now again, we have two accounting methods available, percentage of completion and completed contract. Again, completed contract, you cannot recognize any revenue until the project is complete. That includes if there is an overall loss. So, loss in the period, again, we talked about that before in Part 2. You'd have to take care of it for percentage of completion. You would ignore it for completed contract if it is not an overall loss. If it's an overall loss, that's different. Under both methods, you have to record the loss in the period that it occurs. So now we're going to walk through a problem. Okay, here we have a problem. We can bill $900,000, but we're going to end up spending by 2020 $950,000. So we've got an overall loss on this contract. So first what we're going to do is go through our same process. We're going to look at our cost in relation to our total costs so we can come up with our percentage complete to recognize revenue. So for 2018, we're going to end up with 45%. Same as when we had a profit, and that's going to tell us that's how much revenue we're going to record, that's how much expense. This is for completed contract, percentage of completion, and we're going to have a gross profit of $135. We're going to do the same thing for the next year, but here we have a problem because our total estimated costs are $920, our contract price is $900, so we're estimating an overall loss of $20,000. Plus the gross profit we recognize in 2018. We have to fix this. We're going to have a loss recognized. Now, again, remember, you always have to adjust for prior years because 75% of $900,000 is the cumulative amount that you would have to record over the life of the project. And we're only looking at 1 year's worth, so we have to subtract out the prior year. Now, one of the differences is the journal entries. To recognize the loss, the journals change for determining construction expense. We're going to first credit $155 because we know that that's how much the loss is, the cumulative loss. And that's going to go to construction in process because what we want to do is reduce that account. Then we're going to credit the revenue for 2019 of $270 because we've already determined that that's how much revenue should be recorded. That's the construction revenue. And we debit construction expense for the amount that we need to make our debits and credits equal. And then we'll end up with, on the income statement, revenue of $270 minus expense of $425, which shows our cumulative loss of $155. Now again, we're going to do the same thing. We now have an overall loss of $50. We've already recorded partially the $30 from the prior year, so now we've recorded, let's see, the $20 from the previous year, catch up, or $155 from the previous year, and now all we have left to record is the $30. So, first we have to figure out how much revenue do we recognize, and again, we do this journal differently. We know that we have to credit $30,000 for the construction in process account as a reduction. We have to credit the revenue for $225,000 because that's what the problem says, And then what we're going to do is the amount that we need to make the debits and credits equal is 255. And that way, again, on the income statement, revenue will be 225, expense will be 255, and it will show the amount of loss that should be recorded for the year of 30,000. So now let's look at those journal entries. So again, if we look at this, in our first year we had 135. That is the profit that goes to construction and process. But if you notice, in 2019, we have to record the loss, which is going to reduce our construction and process account, and we have to do that again in 2020. Okay? And the reason we want to do that is because at the end, billings on construction and construction and process have to equal, and we're going to zero them out. So let's look at T accounts. That might help you see this a little better. Now, construction and process, remember, construction and process is a current asset account, and when you want to know about net billings, you're always going to subtract these two. So, in 2018, construction in progress is 405 and billings is 270. So in this case, we have construction in process exceeds billings. Okay, and the next year we're going to book 420, but we're going to back out the 155 in profit. And in the last year, we're going to back out the 30. And you notice when we add them up, we get 900,000, so then we can zero them out. That 900,000 in red is part of that journal entry right down there. Now, what do we do if we're looking at completed contract? Completed contract, we do nothing in 2018. In 2019, if loss is permanent, then we have to recognize it. Cost to date is 690. Estimated cost to complete is 920, which means we have to recognize a loss in 2019. Now remember, we do not recognize any revenue, only the loss. In 2020, we've got total cost of 950, contract price of 900. We've already recognized 20, so the amount of loss we're recognizing in 2020 is 30,000. So now let's look at the journal entries. All right, so again, if we look at this in 2019, if you notice, we've got loss on long-term contract, construction in process, and then in 2020, we're going to record 930 as our cost because we've already recorded portion of that loss. We're going to take out the other 30,000 of the total 50,000 loss out of construction and process, and we're going to book our revenue of 900,000, and this allows us to clear out our accounts. Now let's look at this in terms of T accounts. We're going to determine the balances. Again, we would have our 270. And our 30, which makes each account equal 900,000. And then, of course, we'd have our journal to clear the accounts out. Now, what does it look like when we talk about revenue and gross profit? 4. Percentage of completion, we would record the revenue and we would show the loss. But for a completed contract, all we'd show would be a loss. In 2019, no profit still would be recorded until the contract is complete in 2020. And again, if you notice, the same amount of loss and revenue is recorded in both cases. It's just when it's recorded. And that concludes this presentation.